And to put that into percentage terms, that's like over a 1,400% gain on one contract. Welcome back, cool cats. Right now we're looking at SPY, which is the S&P 500 ETF on the 2-hour time frame. This big rising wedge pattern was targeting about an 8 to 9 point drop, and we actually got an extra 4 points. Like I posted on Webull, I have to question if this whole structure was a false breakout of this massive rising wedge pattern on the overall market. For dip buyers, this could be considered like an oversold paradise, but is the sell-off over? We won't know until price comes down to this support line right here and either confirms it or finally breaks down from it. If you see this intraday falling wedge pattern that I've got here, if you're interested in how you could have traded this mess today and how much money you could have made, I covered that in the video that I just released a few hours ago, linked here. We've got the same pattern that's broken down on the ES, which is the futures. We are below the 50 simple moving average and below the cloud on the 4-hour time frame. And we've also got this RSI symmetrical triangle breakdown, which looks like it's beginning to try to form some bullish divergence, but it's not quite there yet. Then when we zoom out to the daily time frame, check out this RSI pattern. I know some people are like, oh, you can't use RSI patterns just like you could on the chart, but I'm telling you, look at this. Left shoulder, head, right shoulder. Also, bearish divergence at the same time that we had this upward sloping line here, downward sloping line there, and then we got the sell-off. If you think this market is bipolar, let me know by tapping that like button. So we're looking at the dollar strength index, or the DXY. Why should you care about the DXY? Well, because it heavily affects the markets. So we have this big falling wedge pattern that I pointed out in a previous video. We held above this strong support level that I had also pointed out. And this is the breakout target. Look at this. We're targeting all the way back up to like 105 for the DXY. And if the DXY does break out like that, the markets are absolutely going to bleed. On the VIX, otherwise known as the fear index, the TTM squeeze indicator, you can see we were squeezing for weeks on the daily time frame, and that squeeze and volatility has finally broken out on the daily. But if you look at it on the weekly, volatility is still coiling and it hasn't fully broken out. So we could potentially see the VIX come out all the way up to like 25. And looking at the advanced decline line, if you remember in one of my last videos, I had pointed this out. This is before all of this had actually populated. This is before those days had actually happened. And I said that this looked like we got some bullish divergence here. We didn't get this breakout initially because we were so close to the top already. Then we got another bullish divergence and what I like to call a double bullish divergence. And then we had actual breakout on the market. But what we've got going on now is a bit of a coiling pattern. It's basically a symmetrical triangle on the advanced decline line. And we had this big breakdown today that carried the market down further. But we do have bullish divergence that appears to be forming here, and we're right near the bottom here, near this negative 2,000, which often, unless you have a very negative, bearish trending day, this is where the market likes to bounce from. And before we get into the Mag 7, don't forget to leave a comment below with the ticker of your choice. I perform analysis on up to 3 per video, and I share it in the next one. So while you're down there, if you go ahead and tap that subscribe notification bell, you won't miss it. But NVIDIA broke down below this descending triangle, but couldn't reach its pattern target because it hit this main support line here and just couldn't break below it. But now we're below this main resistance line again. And if you look out on the weekly, if you recall from previous videos, this massive rising wedge pattern, if we're below that resistance and we stay below it, this could have been a false breakout and we could be heading much, much lower. If we hop over to Microsoft, we can see we had a very similar pattern. We had the breakdown that tried to break down. We had some bullish divergence that formed here. So they tried to pull it right all the way back up here and it hit this main resistance line again and then sold off. So if you could have caught the 445 strike, which is just a little bit out of the money today, like near the bottom, you could have paid around like $350, $370 and turned that into like $1050. And the main thing I really want you to see is this massive rising wedge pattern on the weekly. We are now below, again, we're below this previous support line. If this is the actual breakdown and it's going to continue, this is targeting at around 347 a share minimum. taking a look at Amazon, I had pointed out before that this main support line had to hold, and that if we got below it, it likely would begin to act as resistance. We can see we basically had a retest here. They tried to retest it one more time. They had, like another lower high. Just kept trying to retest it. We finally got this sell-off. So let's see if you had actually bought some, like maybe a week out puts, what you actually could have made on that. So let's say you went like a few strikes out of the money. You went for the 192.5 puts. Those were selling around like 370. They were under $400 a piece. They ended up, and this is over the course of multiple days, they ended up popping up to like 800, pulled back to about 550, and then they hit a peak today of around 1150. Like, it's just crazy outsized gains. And we're seeing the same thing on the weekly for this as we are for a lot of the other mega cap names. We are below this main support line. And if we can't get back above that, this pattern right here, this rising wedge pattern, is targeting around a 154 per share, which just so happens to coincide with a previous main support line. I had previously pointed out this big ascending channel on Meta, and this is on the daily time frame, but I said if we broke below this main support line, we could actually see this daily gap finally get to be filled, which would be around like 404, 405, maybe around 400 even, depending on how low it went. So if we were looking at this intraday, I want to stop and see how much money could we actually have made on this drop, knowing that we finally broke that support level. So check this sucker out. Before this actually broke out, you could have bought a slightly out of the money 485 strike put that actually wasn't expiring until the 26th. You could have bought that on Wednesday for about $900 a piece. This thing popped up to like double that pretty much, and then finally at its peak hit almost triple that. And if you had been willing to do like very short dated and you really wanted to risk it for the biscuit, let's check this out. You literally could have made so much money. Before the breakout, this was going for like 450 a piece, broke out, hit around 1666. At the peak, it hit 2605. So you easily could have made over 500% just on that move alone. And check out this multi-week rising wedge pattern that I pointed out in my The Markets Will Recover But video. Once you got below this support line, all bets were off. And if you had puts on this thing, let's see how much you could have made. If you went for short dated, basically at the money puts before this broke out, check this out. This thing went from about 50 to 60 bucks per contract up to a peak of about 400, had a pullback to about a 160, 163, and then hit a peak today of over $700. And to put that into percentage terms, that's like over a 1,400% gain on one contract. And like I showed you before on the weekly time frame, once this pattern plays out, this may potentially be a really good buying opportunity. But if this support doesn't hold, then this bigger pattern is going to be targeting around like 125 a share. And last but not least, Tesla. There's not a whole lot to go over here, but like I had pointed out, it has to get above this previous support line, now potentially acting as resistance, before we could see any further upside. And it's kind of probably more likely it's going to get more of a pullback along with the rest of the market. So what's going on here? Why is the market selling off like this? We had Taiwan Semiconductor report amazing earnings this morning, but there's growing geopolitical risk of an invasion. At the end of the day, regardless of the catalyst, the technicals show you when a market is due for a correction or a bounce. Things can stay overbought or oversold longer than expected, but at the end of the day, we've been overbought for way too long. And we've got so many things that are shifting the market. We got the Trump trade, which is good for like traditional energy and U.S. jobs. We got a steepening yield curve. Lower interest rates are like great for regional banks and small cap companies. We have election uncertainty. Big players are unwinding their positions and locking in gains. And it's the perfect storm. You've got SHI, which is the 1 to 3 year treasury bond ETF, in this symmetrical triangle pattern right now, but you can see it's just been going up, 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 and it's holding steady. Whereas TLT, which is the ETF for 20 plus year treasury bonds, is starting to show some weakness. People are afraid of that duration risk, and we're currently below this ascending channel previous support. So if this now acts as resistance, we could see this continue to fall off. And last but certainly not least, we have market rotation. When we look at the RSP, which is the equal weighted S&P 500, you can see how strong it's been doing for the past few days up until today. And one could wonder if the sell-off that started today has anything to do with Biden wanting to crack down on semiconductor sales to China, because it continues to raise more and more geopolitical tensions. And the markets don't like uncertainty. Up until 2 days ago, the IWM, which is the iShares Russell 2000, the small cap ETF, it was doing exceptionally well. And then, of course, we started to get a bit of a sell-off here as well. And I have to wonder if they kind of got ahead of themselves and got a little bit overbought. But as you can see, it looks like as far as the strength goes, they may be starting to make like a new higher low here. We may see it continue on higher from here. And then we've got names like FedEx, McDonald's, JP Morgan, ExxonMobil representing gas, Procter & Gamble, Johnson & Johnson, Walmart, Coca-Cola, Kraft Heinz Company, Marathon Oil, Gold, and then defense companies, of course, like Lockheed Martin and General Dynamics. So we seem to be having money coming out of big tech and going into these smaller cap names, things that are more defensive, things that are offering things like dividends. And like I had mentioned before, if the money comes out of these mega cap names too fast, the same ones that led the whole market up, what do you think's going to happen to the overall SPY and QQQ markets? And on that note, check out today's trading rule to live by.